The taco trade is in full force on the Nasdaq. Gold is flying higher, silver is flying higher, and Bitcoin is in the dumps. Hello everyone and welcome to another market forecast. So I hope everyone is doing well. Hope you had a great weekend. What has been happening in the markets? You saw it in the introduction. The taco trade is working on some assets not so much. If you managed to buy the dip on the Nasdaq, you would be in some pretty nice profits. Again, just to repeat for the people that are not aware, the taco trade, the Trump trade, Trump always chickens out. Basically, how it works. First, Trump makes a crazy post, crazy tweet, market drops, okay? You buy the dip and you can bet that soon after a crazy post or crazy tweet from Trump, he's gonna go back on his word, he's gonna chicken out, and essentially the market will return to the previous level. That is exactly what happened here on the Nasdaq. We are now above the Friday open. Gold just keeps on exploding, silver as well, but you could have tried to execute the taco trade on Bitcoin. I know some people bought the dip on Bitcoin, which turned out to be a losing trade because Bitcoin has not been able to recover. So the idea would have been buying the dip on the taco trade, buying the bottom, and then maybe having a take profit here at the Friday candle open. Unfortunately, this one melted lower. But essentially, if you took a taco trade on the Nasdaq and on Bitcoin, you would overall be profitable because you have a positive reward to risk. That is something you should always strive to have, right? Your winners should be bigger than your losses. So if you had a 2-to-1 reward to risk on the Nasdaq and a 2-to-1 reward to risk on Bitcoin, Nasdaq won, Bitcoin lost, you would be profitable. I personally didn't catch any of the taco trades. I was a bit too slow to react on Friday. But this is a trade I'm in. So I'm in Euro CAD, okay? And this is generally my watch list right here. So the main assets that have the most activity, that are of most interest to me, are here on the watch list. So EuroCAD is the only trade I'm currently in. I think this is a good play. I think this can definitely continue going higher, okay? Euro is a pretty strong currency. CAD is a pretty weak currency. It's all about relative terms. So how is one economy doing relative to other economies? That is the main question. So the euro relative to the CAD is doing pretty well. The CAD relative to most of the world is doing pretty badly. You can see that on the economic heat maps on the Edge Finder. The recent data has been okay, but long-term data in Canada is pretty bad. So the recent data kind of even looks bullish. But if you look at the long-term data, such as the GDP, let's see the CAD, all over the place. Labor unemployment rate is really, really high. It's 7.1% and climbing. Inflation is around 2%, if I'm not mistaken, for the CAD, okay? Around 2%. Not a lot of room to cut interest rates. If you cut interest rates to help the unemployment, you're gonna spike inflation. And housing prices in Canada are going down. Okay, whereas in the US, in the EU, in Japan, housing prices are going up, right? In Canada, they're actually going down. The demand for housing is lower. That means demand for the CAD is lower because to buy a house in Canada, you need the Canadian dollar. You need to first buy Canadian dollars. So most of the long-term indicators, most of the long-term fundamental numbers are short on the CAD. I'm expressing that through my EuroCAD position. Stop loss is set. I'm using a trailing stop loss for this position. We have this lower trend line, and so far it is being respected. So the lower trend line looks pretty good. What I'm closely watching, where I do have a buy limit set, is USD CAD. Okay, so essentially I'm going through the watch list, but I'm going from the most interesting instruments to the least interesting instruments, you can say that. USD CAD, I have a buy limit set. right? So the buy limit is at 1.39864. I have a stop loss at 1.38844. USD, I'm very bullish on. Both short-term and long-term data looks pretty healthy relative to other economies, of course. So we can take a look at the US heat map. It looks okay, it looks fine. Yes, we are in a blackout. The US government is still shut down, but the numbers that we do have look okay. The long-term trends, the long-term data looks really good. Look at the GDP. It's totally fine. Look at the unemployment. I would say it looks okay. It is at a healthy number, 4.3%. That's pretty good. Okay, so USD CAD is a position that I really like. One more interesting thing. If you check the Forex Factory calendar, what do we have this week? A number that's actually gonna be released is the CPI print for the US dollar. Now, I did tell you the US government is in shutdown, but the BLS, the Bureau of Labor Statistics, actually decided to release the inflation print to have a special task force. They made an executive decision to release the CPI because it is a really important number. A lot of things are connected with the CPI, okay? So it is gonna get released. My forecast from my research, from my analysis, actually points to a possible higher CPI than expected. Possible higher inflation. What are people expecting? People are expecting, let's see, 0.3%, 0.4%, okay? And Fed rate cuts are mostly priced in. We could take a look at the Fed Watch tool and we can see October rate cut priced in. December rate cut 25 basis points priced in. Why am I showing you this? Because it is very tough for the Fed to get more dovish, to produce more rate cuts, and very easy for them to get more hawkish, to produce less rate cuts. If the CPI print comes in hot, then the Fed may be hawkish, and that may mean less rate cuts, and that should be bullish for the US dollar. So in my opinion, combining the whole story, looking at all of the confluences, they are actually telling me that the DXY, the path of least resistance, is to the upside. Because it takes a lot of force to push the dollar down, because the Fed rate cut story is already priced in, and it takes very little force to push the price higher, especially if we get a hot CPI print. And my research is telling me there is actually a higher chance of a hotter print than, let's say, a colder print. Right? So essentially a hotter print would be higher than 0.3%, colder print would be lower than 0.3%. And if the number comes out 0.3%, well, then it's right on the dot. But essentially the conclusion is the Fed is already super dovish. It's very hard for them to get more dovish, but it's pretty easy for them to get more hawkish. More hawkish Fed means the dollar goes up, DXY goes up, and that goes really well with my USD CAD long position. Okay, my favorite currency pair for 2025 is the USD CAD, and I want to buy it. It is positive swaps as well. We can take a look at the CAD Trade scanner. Okay, USD CAD. See, positive swaps. So essentially, as long as you keep holding the position, you will get paid positive swaps. Now, if you guys want to get the Edge Finder, if you want to join the A1 Discord, if you want to get trade signals, trade analysis, fundamental event breakdowns, if you want access to Nick's signals, Chris Pulver, Iwind, me, you can do so by joining the A1 Trading Discord, okay? You can get a discount on the Edge Finder, you can get a discount on the A1 Trading Discord with my code, which is MARKO, okay? So this is your discount code. All of the links can be found in the description of this video. Now, let's get back to the forecast. I showed you EuroCAD. I showed you USD CAD, my two favorite things to trade right now. Let's stick to Forex. I'm looking at the Euro Swiss. We are now closely approaching the 0.92 level. Now, that is a level where technically we have bounced 3 times already. That also may be a level where the Swiss Central Bank is doing an intervention. okay, they may not want to see the price go lower than 0.92, so they may go into the market and push the price higher. I believe from my research that they have done so already in 2025 in April. I think they have done it possibly in August of 24, possibly in November 24. So this is a pretty strong level. I'm considering buy setups, okay? I'm considering maybe first a rejection, a large wick, and then I can go in and buy with a tight stop loss. That's the sort of trade I'm looking at. If you want more information, if you want to get this trade signal, definitely join the A1 Discord, because I post all of my updates in the A1 trading Discord. All of my trades go in there. So I'm closely watching Euro Swiss. It's not just me, it is many professional traders, right? This is a very key level, very interesting level. The Euro is fundamentally stronger than the Swiss. Let me show you. So if we go to the most recent data, look at Europe. Okay, so actually most recent data for Europe is not the best. It's actually only 20% of the data is coming out better than expected, but it's still better than the Swiss. Look at the Swiss. 0% of the data is coming out bullish. Most of the data is missing the forecast, missing the expectations. That's pretty bad. So even the fundamentals with this trade, just the numbers, are possibly pointing to Euro Swiss bouncing off of this level. I mean, this is a pretty strong level of support. Don't ignore the technicals. Okay, technicals can be very powerful. And we're definitely gonna get some sort of a reaction. The question is, will we just have a quick reaction and then go back down? Or will the Swiss central bank actually intervene and push the price higher back into the overall range? So that's a trade idea. That's a trading edge. The Trump trade, the taco trade, that's a trading edge. The Swiss intervention level, that's a trading edge. The USD CAD analysis, USD very strong, CAD very weak, that is also a trading edge. Many different types of trading edges we can implement, we can discuss, we can develop, and hopefully this video actually helps you to understand how we can build a trade, how we can build or collect all of the confluences, sort of build a puzzle, and then finally execute a trade. So Euro Swiss, that's about it. I'm not yet in a buy setup, but I'm actively looking for an opportunity. Let's do the Nasdaq, let's do gold, let's do silver, because I know you guys want to see it. So for the Nasdaq, I didn't catch the taco trade. I want to get in. Am I buying these highs? Absolutely not. Okay, so I'm looking for a pullback. I'm bullish on the US, I'm bullish on the stock market, I'm bullish on artificial intelligence, I'm bullish on this uptrend, I'm long until the bend at the end of the trend. That's how the saying goes. So I know it's a bubble, I know it's gonna explode sooner or later, I know it's gonna crash, but until it does crash, I'll be buying all the way to the top, because that's the easiest way to make money. You have a huge trading edge with just buying this thing instead of trying to call the top, instead of trying to sell the Nasdaq or sell gold, right? Let me tell you some levels. Here, this level of support. So essentially, I'm looking for pullbacks, and at these levels, I will probably be adding buy positions. I'm not talking about huge risk. I'm talking about possibly tight stop losses, controlling my risk, and just getting in maybe 0.25% per position. So if all three trades lose, I just lost minus 0.75%. That's very little. But if one of them wins, I have a very positive reward to risk, because I'm expecting the market to eventually go back to the all-time highs. That's just how the Nasdaq works. It keeps on going higher. It keeps on trucking. It pulls back, you buy the dip, and then it goes up. You know, if you were ready for this dip, you were buying all the way to the bottom. I know I was, and it paid off very nicely, but that was more for a long-term investment. For now, for this video, I'm only discussing short-term trade setups. So that's about it. Gold and silver. You're gonna be surprised, maybe you're gonna be surprised if I tell you I'm not looking to buy it or buy them. I'm not looking to sell them, okay? I'm not looking to buy gold or silver because they're just they have exploded so much. They have had such a massive move to the upside. They're overextended. They look parabolic. They look like Bitcoin in 2018 and 2021. They look ready to pull back. They look ready to explode down. Okay, everyone is buying them. Mainstream news, check out the mainstream news. Everyone is talking about gold. It went from 3K to 4K. Now it's 4K, 4,347. That's crazy. Essentially, you would have to be a very new retail trader to buy these highs. I don't think that's a smart idea. Ask any professional trader, any professional investor, they're gonna tell you, don't get in at these levels. Because even if you do buy here and we do go up, sooner or later a correction will come and it will be a big one. So I'm looking for the correction, I'm looking for the pullback, I'm looking for those massive discounts. I can show you some levels, but again, I'm not sure when the actual pullback will come. So you may ask, well, if you're not buying, why are you not selling? Well, I would say selling is even more dangerous. Buying right here is a bad thing to do, but selling right here is an even worse thing to do, because selling into a rally, calling tops, that's how people lose accounts. Now there is many people on Twitter that call tops, call for a financial crisis. And yes, every 10 years there is some sort of a black swan event and the stock market actually melts down. But those people on Twitter, they don't make any money. The only ones who actually make money are the people that are buying all the way to the top. Okay, maybe not now because it's crazy, but buying on pullbacks, buying on pullbacks, buying on pullbacks and just riding the trend. Those are the people that don't get a lot of views on Twitter, but they make a lot of money. So what would you rather be? Would you rather get the views or get the percentage out of the market? I would rather get the percentage, right? Don't be a perma bear, because perma bears are perma broke. So silver, same thing, looks parabolic. I thought the pullback on Friday was the big one. The candle on Friday was pretty big, but today we're up. So today is a bullish daily candle. Maybe we just go up. Maybe we just do this. No one knows. I'm looking to buy on pullbacks. So some levels you can say right there, or this level of support, or here. It's more of an art than a science, you know. But essentially, I want to get in with small risk, 0.25% per trade, get in small probes, and if I get stopped out, it's not a big deal. If one of them works, great. I have a very positive reward to risk. So that's the game plan. And I think pretty much every professional trader, at least professional swing trader, agrees with my opinion, where he wants to buy, but he cannot justify getting in at these prices. So he's looking for pullbacks. That is about it for my watch list. Bitcoin used to be on the watch list. I was watching it, but with this massive sell-off and now that the Trump trade didn't work, I was kind of counting on Bitcoin to go back to the 121,586 level. That didn't happen. I think we're just going to remain stuck in the range. So until we see a big breakout to the upside, there is not much I can do. I think this is the most likely scenario. You see that I have an alert set in the market and I'm looking for a breakout to the upside. Then I would consider getting in on buy setups. So Bitcoin and Ethereum right now, they don't look so interesting. I think there's better opportunities out there. The DAX, European stock market, German stock market, super flat, super range bound, nothing to see there. Platinum is just going up, copper, all over the place, super tough to trade. US oil keeps on melting lower. Hopefully we get some cheaper gas at the gas station. But copper and oil are very, very tough to trade. I don't like to trade copper. I don't like to trade oil. They're heavily impacted by geopolitics. Look at these massive candles. Look at this candle on copper. So I think there's better easier opportunities out there. That would be about it. The final thing I can analyze is USD JPY. I know that's a pretty popular forex pair. I was actually looking for buy setups last week on USD JPY. I decided against it in the end because on the dollar, I have a clear picture. I have a clear stance. I'm bullish on the dollar. Fundamentals look good. Fed rate cuts are already priced in. It's much easier for the Fed to get more hawkish than it is for them to get more dovish. That should tell you everything you need to know. For the yen, I'm not sure. I'm not sure about the yen. You have a new prime minister. She is dovish. You have the Bank of Japan. Bank of Japan is hawkish. That's a clash. Who will win? No one knows. I'm waiting for more information. Will they both be dovish? Will they both be hawkish? One thing I have noticed from my research, in the last few weeks, you could see a lot of JPY selling in the Asia session. Lately, or last week, it switched from selling of the yen to buying of the yen, which is reflected in the price right there. See? So, maybe the big players in Japan, big institutions, big hedge funds, big banks, maybe they have started to actually accumulate the yen, buy a huge sum of the yen during the Asia session, and that could mean lower prices for USD JPY. You can see I don't have a clear story, I don't have a clear bias, I don't have a clear direction, so I'm going to remain patient. That is why USD JPY is currently not on the watch list. So that's about it. Thank you very much for watching. If you have any questions, you can put them in the chat. You can join the A1 Discord. You can send me a DM. I will be very happy to help you. Good luck in the markets. What I want you to do, I want you to check out the CPI print on Friday. It's gonna be a big one. It's gonna be important. I told you why it's important. So it is kind of the only number that's getting released out of the United States. But I think it's gonna come in hotter than expected. And I think the DXY is gonna benefit from that. I think the DXY is gonna like it. So USD CAD is the position that I'm using to express that view. So that's it. Thank you for watching. See you in the next one.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.